This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices firmed slightly on Wednesday, with traders expecting OPEC Plus to announce an extension to supply cuts this week while heightened geopolitical tensions continue to dominate market sentiment. Brent crude futures were up 19 cents, or 0.26%, at $73.81 a barrel by 0916 GMT, while U.S. West Texas Intermediate crude futures rose 13 cents, or 0.19%, to $70.07. A shaky ceasefire between Israel and Hezbollah, South Korea's curtailed declaration of martial law, and a rebel offensive in Syria that threatens to draw in forces from several oil-producing countries all lent support to oil prices, said Priyanka Sakdeva, senior market analyst at Philip Nova.
Rising costs of building and equipping new U.S. liquefied natural gas plants will reduce the competitiveness of U.S. gas exports, analysts at Poten & Partners predicted on Tuesday. U.S. projects have faced rising construction costs, with Venture Global's Plaquemines export plant under construction in Louisiana over budget by $2.3 billion, and Golden Pass LNG, a joint venture between ExxonMobil and Qatar Energy, more than $2 billion over its original budget. Natural gas prices could also go to as high as $6 a million standard cubic feet because of increased demand from LNG export plants, a possible 20% growth in electricity usage, and the need for significant investment in infrastructure, said Jason Fear, Poten & Partners business intelligence chief.
Moving on to the top news in the energy sector.
Venezuela's oil exports jumped last month on higher sales to its mainstay Asia customers, and approached 1 million barrel per day, BPD, a level not seen since early 2020, according to ship monitoring data. Under U.S. sanctions since 2019, Venezuela's exports of crude and refined products have been highly volatile. Lack of investment and frequent fires and outages at the South American country's aging oil infrastructure put a ceiling on production and sales. State oil company PDVSA, its joint ventures and other state companies last month shipped an average of 974,033 barrels of oil per day of crude and fuel, mostly to China. It was the second consecutive month of increase, according to Reuters' analysis of tanker movements.
China's gasoline exports are expected to have rebounded in November after refiners dashed to secure higher profits before changes to export tax rebates took effect this month, analysts and traders said. The increase could reduce China's high products inventories and provide brief support to Chinese refiners that have faced thin margins as demand at the world's number 2 consumer of the product barely grew this year. China's exports of gasoline, diesel and jet fuel are estimated to rise to 2.74 million metric tons in November, with Singapore the biggest destination for the first two fuels, according to ship tracking firm Vortexa. Next, we have the top news in metal markets. India's construction boom with its gleaming high-rises and multi-lane highways was supposed to drive up domestic steel sales, but Jogindra Group's mills in northern Punjab state are filled with unsold inventory. A flood of cheap Chinese steel has pushed India's smaller mills to scale down operations and consider job cuts, as the South Asian nation joins a growing list of countries contemplating action to stem imports. India, the world's second-largest steelmaker, turned into a net importer in the last fiscal year, sounding alarms in New Delhi about what a weakened sector portends for the security of future infrastructure projects and steel-reliant industries.
Portugal's government plans to launch a long-delayed tender of lithium prospecting licenses in 2025 as it seeks to make the country a top European supplier of critical metals for the green transition, it said on Tuesday. The centre-right government, which took over in April, said that the international tender for lithium prospecting will target 6 areas in the north and center of the country. The previous socialist administration initially planned an auction in 2018, but concerns about the environmental and social impact of lithium mining have led to multiple delays to the auction.
We will now look at the top news in the agricultural sector.
Chicago soybeans futures slid on Wednesday, giving up some of the gains from the previous session, as the prospect of record crop in Brazil weighed on the market. Wheat inched higher on concerns over tightening world supplies, while corn nudged lower. Global soybean supplies are burdensome. Brazil is going to have a big crop. We expect prices to remain under pressure, said one agricultural trader in Singapore. The wheat market is getting tighter as far as supplies are concerned.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.